we see it as an asset class. So that's like a green light that says, we once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. And so even 1% of that multi-$100 trillion funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and then you start to see it really race ahead to those very, very 7-figure type predictions that people have been making, including myself, for years, because it is an asset class.
Hey guys, welcome back to Everyday Finance. In this video, Max Keiser discuss about Bitcoin. Max Keiser says, as a new asset class, it has a huge amount of potential because there are $100 trillion to $200 trillion worth of assets that can be invested around the world. The hedge fund and private equity industries are very competitive with each other, and they're all trying to get an edge on, but there is another player in the market. And if Bitcoin comes in, Arena as an asset class and hedge funds are starting to do better based on their Bitcoin position. They know that a huge amount of money will flow into BTC, and I think that's where we are now. When BlackRock or one of these other big funds tutor Paul Jones was probably the first big-name hedge fund to talk about Bitcoin. In other words, when it becomes as a type of asset, and if you listen to Larry Fink and these other Wall Street types, they use the phrase that they use will be, well, we see it as an asset class, so that's a go. And lots of things Max Keiser discussed, so please watch the video to end and share, subscribe our channel Everyday Finance. Thanks.
Well, it was inevitable, of course, that Wall Street would get into Bitcoin. And, my background is mostly in Wall Street. So my introduction to Bitcoin and the way I saw Bitcoin from the beginning was from that perspective. So I wasn't coming to it necessarily from the technological front, and I wasn't coming to it necessarily from the philosophical angle. Mostly I saw it, and my first question back in 2011 was, is this an asset class? Because if it is an asset class, if it's a new asset class, then the potential is enormous, because there's $100 trillion, $200 trillion worth of investable assets around the world, and they're very competitive with each other. The hedge fund industry, the private equity industry, they're extraordinarily competitive, and they're all looking to, get the edge on the other guy in the industry. And if Bitcoin enters that arena as an asset class, and you have hedge funds starting to outperform based on their Bitcoin position, you're going to have this huge groundswell of capital moving into Bitcoin. And I think that's the stage we're at now. So when a BlackRock or some of these other big funds, Paul Tudor Jones was, I think, probably the first hedge fund to mention Bitcoin in a big way. And so when it becomes recognized as an asset class, and if you listen to Larry Fink and these people on Wall Street, they, the phrase that they use will be, well, we see it as an asset class. So that's like a green light that says, once it's categorized as an asset class, we have nothing to do except position ourselves in this asset class. Either we're going to be a small position or a big position, but we cannot ignore it. We cannot not have a position. And so even 1% of that multi-$100 trillion funds available, moves the needle on Bitcoin. It moves it up considerably. So if you get into the 5 to 10% range, and, then you start to see it really race ahead to those very, very 7-figure type predictions that people have been making, including myself, for years, because it is an asset.
So Max Keiser also discussed about Bitcoin adoption in El Salvador, and I asked this question. So Max Keiser, El Salvador is one nation that has taken the lead, and you mentioned President B. Kelly. I think it was such an incredible accomplishment when a president of a nation chose to use Bitcoin money that the government cannot control as legal tender. And, I really want to commend what you and Stacey have accomplished there. You two relocated there and have been working there, so you are familiar with I suppose that's sort of my first question for you. To try to encourage the acceptance of Bitcoin. There, Max, You know, you've been here since the dollar, so I suppose you don't have to do this for financial gain. But if you and Stacy are advocating adoption in El Salvador, why was it so, why it was vital for you to go there, and why you wanted to support the movement that aimed to sort of embrace Bitcoin?
Well, it was always going to be the case that like a country would make Bitcoin legal tender. I remember we had Tour de Meester on Keiser Report 5 or 6 years ago, and we were debating, what country would be the first to make Bitcoin legal tender. And Tour said, well, it's going to be a small country. It's going to be a country looking to escape maybe the dollar hegemony, etc. But El Salvador was not one of the countries we guessed. But the idea is that definitely at some point a country would make Bitcoin legal tender. So El Salvador was that country. And so Max and Stacy went there and we met with the president. And it was obvious that he was completely orange-pilled and understood Bitcoin at the deepest level. And so this would be, the Bitcoin citadel. This would be a country now is going to be recreated from scratch. Because remember, El Salvador had been through 50 years of hell, civil war, and then the gang wars. And the country's being rebuilt really from scratch, and it would be built on Bitcoin as legal tender. So couldn't imagine a more exciting project to be a part of. So we moved there, and we've been able to offer our thoughts on some stuff and make great friends there. And the attitude there is just fantastic. The attitude in El Salvador, because of Bitcoin, Bitcoin is known by 100% of the population. You don't actually need to use Bitcoin to be orange pilled, because the mindset of Bitcoin is already, you're making a change in your life. And then you have 5, 10, 15, 20% of the population actually using it, and the adoption rate is increasing, etc. But the mindset is 100% part of the daily life. And the optimism that comes with having unconfiscatable wealth that you can aspire to make better in your life, to accumulate property, to have property, unconfiscatable property for you and your family, it has a tremendous impact, and you can feel it wherever you travel throughout the country. There's just an optimism there, and which you don't really have elsewhere. I mean, in the U.S., I think by contrast, the mood seems to be a bit of a downer. People are less optimistic because there just seems to be very not much of a focus on what the country should be doing right now. It seems a bit lost. But you don't find that in El Salvador. El Salvador is very focused, and people are just in a great place.
Yeah.
And this is just permeates throughout life there, class. Now, on the flip side, you have what we saw in the gold market, which is that the ability to control price discovery and manipulate prices is real through the derivatives market. So the price of gold has been lagging inflation for 20 years because the governments around the world don't like gold making their fiat money look bad. So they make it easy for huge funds to manipulate the price of gold and to scalp and to continuously skim profits off gold, which is what they do almost every day. You can watch it and see it. It's pretty clear. And they are very good at keeping the price of gold and silver down. There are something like, for every ounce of silver, there's probably 50 ounces worth of derivatives floating in the various exchanges around the world that are used to keep the price of silver down, because governments don't want gold to race ahead and to draw capital out of their fiat money scam into gold. With Bitcoin, we have the ability to pull our private keys, which is not really available in gold. Technically, people can take delivery of gold on these exchanges, but there's never been an organized attempt to do so. We tried to do it a few years ago with crash JP Morgan buy silver, because after the 2008 financial crisis, when JP Morgan ended up buying Bear Stearns effectively for nothing, they inherited this huge multi-million short silver position that Bear Stearns was managing at the behest, presumably, of the government. The government likes to stay involved. And so I did some calculations, and it became clear that if this short position wasn't covered, and the price of silver got to $60 or $70 an ounce, it would bankrupt JP Morgan. So we started this crash JP Morgan buy silver campaign, and we got the price from 15 up to 50, which was the old the Hunt brothers. The Hunt brothers got a price up in the 80s into the $50 range. They were cornering silver. So we got it back up to the old Hunt brothers $50 level. And then the feds, of course, came in, and they changed the laws overnight to make it possible for these banks to have and carry much greater short positions in silver. So they printed up a lot of paper silver derivatives, and they stopped the run on their bank, and the price went back to 15 or so. So we've seen that it is possible to force capitulation in the silver market. But at the end of the day, because the ability to pull private keys is not like it is with Bitcoin, I don't think it will ever succeed. Whereas with Bitcoin, you can pull your private keys, and that is what the late great, I shouldn't say late, but the former Bitcoin superstar Trace Mayer started a campaign that on January 3rd of every year, people would pull their keys off exchanges as a way to maintain integrity and to prevent these derivatives bubbles from building up to excessive price manipulating levels. That was, just to give a shout out to Trace. I mean, before, Michael Saylor, everything Michael Saylor says about Bitcoin in terms of an asset class, Trace Mayer said first, starting, he was a buyer of Bitcoin at 25 cents, and going back to 2010, right? And then but he's another example of somebody who disappeared, one of the OGs who disappeared, and that's kind of an interesting story as well. But you're right that when you have huge money in these markets, they have the ability to manipulate price. And but a couple of things, I think, with Bitcoin, because in order for the gold suppression scheme to work, you really need cooperation amongst all the billion banks. So there really is a gold cartel. And the risk, of course, whenever you have a scheme like that, is that, you have, if you're short, obviously you have a risk on the upside. But with gold, under the best case scenario, even let's say a war is started, and we've already had a couple of examples of that. It didn't really have much of an impact on price, but I mean, we're saying the price maybe could jump 10, 15, 20% with gold. You're risking 10, 20% on your short position to skim, 1% every couple of days in perpetuity, right? So that's a risk these banks will take. But with Bitcoin, you really, if BlackRock or the Saudis or somebody came in and said, we're putting an order in for 500 billion Bitcoin, and the price goes from 30,000 to 120,000, that's a huge move, and you're going to get wiped out if you're short. And so it's going to be difficult to maintain an anti-Bitcoin price suppression cartel, because the upside is just too incredible. It's you're talking millions of dollars a coin, and so there will always be at least one of these players to drop out of the cartel. You won't be able to get a cartel organized. So that's one thing that Bitcoin has in its favor. Additionally, it's easy to pull the keys, and then thirdly, you just have in the background the ongoing collapse in fiat money world. I mean, the fiat money world is really at the end of a 300-year period or experiment going back to the creation of the Bank of England, and this idea that fiat money could work. I mean, we know after 300 years that it never works. They all go to zero. None have ever survived, or they're lost 99% of their purchasing power. So I think we're entering a new epoch where the fiat money is going to be history. The CBDCs that are coming up by central banks are just an attempt to reinvent fiat money, and it's not going to compete with Bitcoin. People are going to see Bitcoin as the path away from centralization, CBDCs, and everything else that comes with it, and they're going to continue to embrace Bitcoin as a way toward economic freedom and just freedom in general.